Hello, stock traders. I hope all of you are having a good morning. This last couple of weeks have been real tough. But in this video, we're going to talk about what I am looking for the turnaround in this market. And so you will want to stay till the end of the video and see some of the things that I'm looking at. I have talked about some of these things in the past, but I'm going to kind of review and go over them. We have seen some bludgeoning of sell-offs, lots of tough conditions in the stock market. This has been a rough ride, but when this is over, I think a lot of investors are going to be looking back at this time saying, why didn't I buy? Why didn't I pick up some of those great deals that happened? I don't think we're quite there yet. I think there's some more pain to go, but we should see heavy discounts in the stock market. And in those times, I, in the past, have been able to pick up some great deals on some insider activity. That is what I do. I track insider activity. Some call me a permabull. I like tracking insider purchases. Insiders sell for lots of different reasons, but they report and have to report their insider purchases and sales. I am talking about insider activity that is legal insider activity that the SEC requires for these owners and these insiders within these companies, these officers, to report. This is legally reported insider activity that I like to pay attention to. And there's certain things that I look for in those type of things. Anyway, let's get in and start talking about this right away. But before I get going, if you could do me a favor, please hit that most amazing and wonderful like button. Also, if you haven't done so before, please subscribe and turn on those bell notifications so you get notified when a new video comes out. All right, let's go to it. And yeah, this is what we got going on right here. You can see this just massive sell-off. We had Jackson Hole that kind of happened up here, the rejection here that happened. We have had a poor CPI report, which was a surprise. Actually expected that to be good. And it was not. We broke that level of ascending support that had happened and passing below that. And then now we have had our recent Fed rate hike all the way down here. And this is a level that, I'm surprised really that we're at, but we are at. So that's just the way that it is. The stock market did come down on Friday and touch this open gap and then bounce off of that. I don't know if that was a dead cat bounce, if this will hold, but this is an extremely important level to pay attention to. This is 365, and 365 is very dangerous if the stock market should break down below that. So if the S&P 500 breaks down below that, I am more risk off than ever. And in fact, usually in one of these videos, I have some stocks to talk about where there's been some significant insider activity. And insiders are scared too, because on Friday, what I noticed is that there were no transactions of importance. And when that happens and no insiders of any company find anything bullish for them to buy into, then that is typically not good news for the stock market. We do have this gap open to the upside here, but this is something to really, really watch. Now, this previous low is 360.69. If we break, I would say below 360, and really 365 is really that level, we should start to see capitulation down to this open gap that's down here at 354. And so this 354 gap is old. It's back from 2020. But it is the next gap in the story of this moving downwards. So I really don't know which way the market's going to go. Of course, I would love for it to bounce. But with no insider activity reported on Friday, I think at least in the short term, no one's really that bullish. And so we could see this level not hold. And if we don't, that is something you're going to need to be aware of. And you will want to be risk off. Now, I think the market could dip and dip heavy. And if it does, it will provide this phenomenal purchase of stock and different things. And I think insiders, one thing to watch will be for the Form 4s to see if those insiders go in and say, This is the time. Let's get in. I'm going to make huge money now. My company is way too cheap. I have to load the boat. Now, one thing to understand is when these insiders buy shares, most of the time they have to hold for at least 6 months. It'll depend upon their employee contract and different things of that nature, but it is really frowned upon from an employee to sell after they bought for at least 6 months. So they're pretty much stuck. It's not good news for them if they do that within their own company. Also, SEC investigations, all kinds of things that can happen. So insiders, as a rule, hold on. So this thing to look for bottom, what am I talking about? Well, if you don't pay attention to the VIX, which most people refer to as the fear indicator, then you need to start paying attention. Now, there's some different levels that are really, really key. And I've been talking about this a little bit in the last couple of videos, and this is where to watch for a market bottom. Now, the VIX is an indice that tends to, it's the volatility index, and it tends to not hold higher prices. And there's certain levels that it really, really doesn't hold very long. And the further down the VIX goes, as a rule, stocks move up. Now, this is a volatility index, so that doesn't necessarily mean that that is what has to happen. But the more the VIX is down in price, the more stable the markets are, the safer it is that most people feel that it's a good investment. And so it has been spiking here lately. So as you can see here, it has gotten above this 24 level. Now, 24 is a very important level on the VIX. This is kind of, this is above average, but above this usually means that the stock market is starting to sell off. And you can see once we hit that, then this is a level that can be of great concern. Now, typically when it comes up to this 24, it can get crushed down to $19.50. $19.50 is the average price of the VIX. It's kind of known as the median price. And so here at 24, you should be worried about the stock market, but the VIX rarely holds above these levels. Like, for example, here's 29, and 29 rarely holds. And so sometimes when it will spike above 29 or even get to 38, if I feel like the insiders are buying, I will take advantage of this by buying SVIX, which shorts the VIX market. It's a stock that you can buy and a fund that you can buy that shorts the VIX market. Although I don't feel as confident about that trade right now. And so what I will do is when it gets above 38, I will buy it. And when it dips down below 24, I will sell it. And so I just have my alert set up on that because it rarely holds up above 24 once you start to hit some of these levels. Now, the mother of all VIX levels, this is, I go all in on the stock market when I see this. And man, I've made some big money. I made some big money in early 2009 when this happened. Also in 2020 when this happened, that was my cue to kind of get out of and change my strategy. I like to buy big time because when we get above 46, it has a 0.1% chance. That happens 0.1% of the time. So it does not happen very often, and it does not hold for very long. So this is a mass fear. And at some point, everyone runs out of stocks to sell, and that fear level will drop and subside. But when you see this, a lot of different bear markets have ended when the VIX has hit 46. And so that's something to watch for. I've talked again about this a couple of times here in the past, and this is just something that I look for. So I'm looking at where the VIX is. What is the S&P 500 doing? Where are the open gaps, up or down? The other things I'm looking at is I'm looking at the Form 4s. That is key. That is like listening to the vital few, the people who matter, those who know their company the best. Like, for example, a CFO might know his company. And if he is buying shares with his own money in open market, I am very confident about loading up shares of that company And I will typically ride the momentum that happens from those type of purchases. And I have a plan, and I always have a plan for each and every stock that I get into. And that's how I make money over the long run. Now, this year has not been a great year. Obviously, this has been very, very tough. I have only lost money in 1 year previous to this, and that was in 2018. 2018 was a very difficult year there towards the end, and we saw big volatility spikes and different things that happen. And I did have a 6% loss. But when the market is average to good, by trading this way, I have had a lot of success in trading this way, and you can too, following those insiders. And if you are interested in my insider alerts, the place to get them is with my Patreon group. You will want to check it out. It's definitely worth the money that it costs. Now, you may not always like you may not always feel good about the market, but those insider transactions, it's good to know which ones I find significant. I've been doing this for years and years and years. I've invested this way, and I've had so many 100% plus gain years that, yes, this has been a tough year, but at some point we will hit the bottom on this market, and everyone will be looking back and wishing that in 2022 that they bought up shares with the insiders and did so with a vengeance, because we are going to run into great value levels eventually. Well, I wish you all the best on the stock market. I so appreciate all of you who watch these videos. Please reach out to me in the comment section down below with any questions that you may have. I hope you have a fantastic week, and Raythoven out.